All right, what's up, investors? It's been a while since I've recorded one of these, maybe a couple of days. I'm going to do an account update and then I'm going to share some of my thoughts on the current market conditions and economic status. So it's going to be pretty thorough. I'm going to go through all the positions, my investment tab, and then even comment on some of the positions that I'm doing right now. And do like a little bit of overall thoughts on where I am mentally, I guess, in this journey to $1 million on this account. So without any further ado, this is the account here. I'm sitting at a 203, 651. I had about a grand down today. I'm going to compare performance to the SPY to see how I'm doing. I'm actually the least leveraged that I have been in quite some time. So this is if I click on the cash, this is what shows, right? So I have a bunch of options collateral because I just layered on a bunch of options. You'll see what I'm talking about in a second. You can start seeing that on the right if you read through the options. And so I don't have a lot of bank power right now, but that's okay. Hopefully I don't get stuck with it. I really don't want that collateral that badly. The collateral happens to be Disney. So we'll figure it out. But this is today. My 1 week performance is as follows, up a percent. 1 month is blistering 14.35%. 3 months is 21.71, which is very, very good. 1 year is 18.14, and this is the all-time chart. I started investing in August 2018, somewhere around here. So that's why the chart looks so flat in the beginning, because there just wasn't any money in it. I'm close to an all-time high. I think my all-time high close was 206-ish, something like that. So anyways, let's take a look at the SPY. We'll do comparison first today instead of all the positions, all right? That's how we're going to do it. So market was down 0.4%, which is about what my account was down. The 1 week, market's up 0.35. 1 month is 7.05, so I was about 14, so only 7% ahead now. 3 months was pretty wicked, 20-some%, right? Market's up 1.8, not bad. 1 year performance, I was positive. Market's down 7%, and I was positive 18, so 25% difference between the market and myself here. This is the investment tab. This is the margin, only 14.25 multiplied by 2 is 20 and a half margin right now. So it's really low margin relatively speaking here, but I've layered on some options like I said. So the collaterals, I might get stuck with a bunch of Disney stock that I may or may not want to keep for a long time. We'll see. So as far as the positions go, Apple is my number one position in performance and in equity. I have basically $118,000 invested into Apple right now. Second largest is Main Street Capital and then Realty Income. Goldman Sachs, I'm sorry, this is by total return. Equity is Apple, Main Street, and Paramount are the top three. So let's go back to the account here. I'm going to run through all the positions so you know exactly what I'm holding. You can pause English. You can pause the video at any time to try to figure out the exact position. All the information is within this little square here. So I'm going to scroll down it real quick. By the way, you can see a bunch of Disney options, put options being sold here. So I'm layering this position here to try to collect some premium on the earnings results. They all expire at the end of the week. I have sold one PayPal call against my lead position, to try to reduce some of the premium loss due to time decay here. So everything else is pretty familiar. Still have some Chinese ADRs that are probably going to expire worthless, unfortunately, but such is life. Unless China decides to turn around and go back to capitalism, it's looking bad because right now it's pretty problematic. Builder was down. This is my watch list here. A lot of movement in the watch list, that's for sure. Okay, so we've compared the account to the SPY. I'll run you through all the positions with the daily performance investment tab. So now is this time for overall market thoughts. So my anticipation was that the market's going to be start heading down this week, but so far the first 2 days it's held up okay, and so it gave me the confidence to try to make a play and collect some premium. I'm going to be collecting about $400 of premium by selling Disney put options. So earnings coming out, and there's mixed opinion on it, which is exactly the type of earnings that I like, because the movement's probably not going to be that large. It's not like everybody's on one side of the equation, and then if it flip-flops, we're going to have a bunch of sellers or a bunch of buyers throwing everything out of proportion. So I felt pretty confident with Disney. Plus, I've done some homework. I've done research on Disney before. And so if I get stuck with that collateral, it's not the end of the world. So that is why, I decided to go for this play. Now, as far as the overall market thoughts, I thought the market was going to head down. Like I said, it's been hitting some interesting, support price action, but I still think that there's a lot of downward pressure, and especially if the hikes come in the next 6 to 12 weeks, it's gonna definitely pull the valuations down. I mean, the higher the percentages, the more money people can get just keeping their money in, baseline returning instruments like bonds and things like that, short-term bonds, all kinds of CDs, savings accounts that are going to start yielding like 2.5, 3.25% soon. So that's really going to put a lot of pressure on stocks and all kinds of assets that yield less than that. Okay, so if you're yielding less than that, you better have a really, really good company that's going to eventually beat that number quite a bit, because you need to compensate your investors for taking that additional risk to invest with you, rather than just leaving the money in a savings account. Yeah, like, we get inflation is going to eat up most of that, but you're still, let's say inflation is at 9%, you're getting 3 in your savings account, you're only getting hit by 6% inflation, rather than getting hit by far more if you invest with an unprofitable company, right? You may experience like 20% loss of purchasing power per year. The 9% from physical cash and whatever the money the company happens to lose that year. So you're really not getting compensated at all. And it's that much money that company's going to have to earn in the future in order to get that return back to you. So the growthy companies, the ones that are looking out further into the future, are just going to, keep getting decimated, and they're going to grind lower and lower until they reach the zero bound. I mean, a lot of companies might actually bankrupt because of loss of funding. Maybe they're not going to get any lending happening, right? They're not going to be able to draw on any kind of credit lines from the bank. They may not be able to issue stock because there's just not enough appetite, and the stock price is just going to plummet, and they may have to cease operations. I mean, if the company is not a halo company, and if it doesn't, have good selling point for the banksters, and they cut them off because they need capital, well, then tough luck. So this is a very kind of like market destruction environment, but we haven't actually seen it reflected in the S&P that much. IMO. It's the S&P went down like over 20%. Nasdaq went over 35, I think, but or around 35. But that's not nearly enough for this rate increase path that the Federal Reserve has taken here, our central bank here in the United States. So I'm expecting some downturn. I'm not going to play the downturn side, though. I'm going to just keep doing what I'm doing as usual. I'm going to try to make money off selling options and things like that. But I do worry, right? I have pulled out a protection for like a day, but I have a really hard time holding on to insurance against downturns. Like, when I just see that money bleed, it just, it makes me bleed on the inside. Okay, my heart starts bleeding. So I look to get out of that position quickly, maybe collect $20-30 back in profit and just go. But I should try to figure out a way to protect myself against the eventual downturn. Even if it does cost me some money, I have to figure out like mentally how I'm going to handle it. Technically, there are many ways to do it. Okay, like you can buy puts, you can do inverse ETFs, you can do, shorting through other brokerages. Robinhood doesn't allow shorting, but other online brokerage houses allow it. So I could do that. There are many ways you can do it, but it's what you're able to handle mentally. So if you're able to hold on to an inverse levered ETF, and be willing to grind it down to a very low price over a long time, then more power to you. I just, I haven't figured out my mentality and what I'm able to tolerate and sleep with when it comes to downside protection. Like, I'm in the business of selling market insurance. I have a tough time buying it. Does that make sense? So, if you guys got any suggestions, I'm all ears. But I haven't figured it out. And there's another issue to all this, is whether or not I should trust an inkling of my instinct. Even though I've had some experience in the markets now, over 15 years in the markets, I still don't trust my instinct one bit. And why would this now be logically a great point in time to start trusting my instincts? Okay, so if I'm thinking this way, chances are like a lot of other investors are thinking that way. I'm not just like some contrarian genius. Everybody's a contrarian. So I can't really trust. I have to just keep doing what I'm doing, and that's what I'm trying to do against my urge to do otherwise. So there are plenty of forces that are keeping the market uplifted especially over a longer period of time. One of the biggest things that I always talk about is inflows. Everybody's paycheck gets like a portion invested into some retirement instrument like a 401k or something like that. Plus, people like to invest their savings on the side, and even if they just leave them in the bank invested in something. So there's all kinds of investments happening all the time, and the financial world as a whole, due to inflation and other factors, is increasing. And that's been the trend forever. Well, not forever, but at least in the United States for a very, very long time, and I expect it to continue. So I think that the prices are going to keep getting pumped just because of inflows alone, at the very least, and maybe other factors that I don't know about. But obviously that's being countered short term by these interest rate rises. So there's this like tug of war that's going on right now. I think there's always a tug of war, but I think the main two forces in this tug of war at the moment are interest rates and inflows, and we'll see who wins in the long run. But those are my thoughts. My mental state is a little bit awkward. I feel I'm trying to record, like, this is kind of a bit of a journal for me as well. One of the main reasons for starting this is so I can journal like where I'm at mentally in each state of my journey to $1 million. And here I am, like, sitting at all-time high or near all-time highs, off by about $3,000-$4,000. And I feel a little bit numb, actually. Like, there's this feeling of kind of like, okay, I'm about to lose a big chunk of this right now. It's not really like a feeling of optimism or joy or anything like that. But what I'm trying to do is I'm trying to stay mentally strong, which is very challenging. Not do anything stupid, and do what I've been doing and stay the course and not be swayed by emotion. So that's the challenge that I'm dealing with right at this point. So no matter how or what's going on in my life outside of investing or even inside investing, whatever, I can't let it influence the way I take money from the markets, right? That has to be a bit more machine-like. But unfortunately, you can't make it a machine out of it because it needs my judgment. So my judgment has to be clear of all this garbage, all these different inputs. I have to kind of like swim through it and get a clear read on a good judgment. So that's the challenge that I'm dealing with right now. Let me know if there's any kind of challenge you're dealing with in your journey, because I really want to know, actually. So let me know. Write me in the comments below. I read all of them. All right, that's it for now. I'll make another episode, an update tomorrow, probably, hopefully. Peace out.